2, 1.
Okay, and welcome out to our event here on a Monday evening, 12/20/2021. This is Coach Tim Justice from Tackle Trading, and here to present the concept of portfolio design. And tonight, guys, I've got a lot planned for you, a lot that I want to get through and kind of talk to you about and teach you about from a mindset perspective, a mechanics perspective, and an execution perspective. But the first thing I want to do is actually talk about the tackle trading ecosystem so that you understand exactly who our company is and how to get involved with us from an educational level. Here at Tackle Trading, we're on our YouTube channel tonight, and thank you for attending and being a part of this. If you are brand new to the YouTube channel, make sure you subscribe, click the bell, come back and join us on a daily basis. If you're looking for trading education, trading content, we actually do 2 weekly podcasts, one called the Trading Justice Podcast that is a weekly feature where we look at the markets one step at a time, give you a full review of what's happening. We release that on Mondays. And then we have a feature presentation where we do interviews and all kinds of fun stuff. The Huddle comes out on Fridays. You can find either of those podcasts right on our website. You can go to tradingjustice.com. And within our pro membership, we have all kinds of different value. We have our reports on the weekend for our newsletter to give you updated rankings on the market, stocks, options, commodities with bullish and bearish analysis and different pick lists and different candidates that you can trade in the market that are found by our veteran coaches. We have all of our different shows, the halftime report, the traders lounges, the coaches show, the cash flow clubs, daily content. Whenever the markets are live, we're live with our team via Zoom in a webinar format, teaching people how to do this kind of stuff. And yes, we do that on YouTube each and every day. Markets are live as well. As a part of our pro membership, you get access to our 101 courses, including technical analysis 101, options 101, futures, forex, system development 101, and a free guide called the 7-step guide to trading. We have premium blogs that we would love you to come and enjoy, including the Tackle Today, which is delivered every day to your email inbox with mindset and content analysis for traders on a daily basis. Wonderful tools, including our journals, different calculators as well in our trade center that I believe you guys will really love, including our covered calls list that is optimized for cash flow traders to use in the marketplace. And yes, we're on all the common social media channels, but one of my favorite ones we've introduced here in 2021 is our Discord channel, actually, and our pro member community and our mastermind groups. They all communicate regularly on our Discord channels where they collaborate and they share ideas and thoughts and analysis. And yes, even some memes and some jokes as well over there on Discord. It's a lot of fun. If you're a pro member at Tackle Trading and you're not yet on Discord, make sure you buzz us an email, team@tackletrading.com, and we'll get you the invite link to it. And if you're brand new to Tackle Trading, come and join us over there in that channel. I think that you're really, really going to love it and be impressed with the conversation going on there. If you want to join our pro membership, just visit bit.ly/join Tackle Pro and participate in all of the glory that is Tackle Trading in the community that we've built here. And if you're looking for a conversation with one of our coaches like myself, I actually did 2 of these consultations today with brand new members of our community. And I want to give a shout out to those 2 men. I love talking to you guys out there, I got to tell you. And if you do want to have a conversation with a coach like myself or Coach Emily, one of the coaches will be with you on tackletrading.com/schedule consultation. You book the appointment in advance. We can answer your question about your education and whether or not things like the one-on-one coaching program or Tackle Trading Pro is a great fit for you, where you should start, where you are. We're here to help. We're here to answer questions, give you guys some direction in terms of what to work on first, second, third, and so on and so forth. Make sure you head over to tackletrading.com/schedule consultation. And I would love to meet with you guys one-on-one. And this is me. I'm your presenter here for tonight. My name is Tim Justice, and thank you for coming out and joining us here this evening. I am an entrepreneur. I've been an entrepreneur literally since I was a little kid. I think it was built into my DNA. It's the way that I've approached opportunities and risk and reward and running businesses. It's who I am. I'm a trader and investor for the last 16 years. I entered the financial markets through, educational courses in 2005. And I've had many, many different experiences in the markets and built relationships and had wonderful time doing this. I love it. I love trading the markets. I love investing in the markets. And I believe these are life skills that most people should absolutely build, no matter what role they want to play in the markets, whether it's from a long-term perspective or a short-term perspective, some balance of in between or both. You need to learn how to do this properly. I am the founder and the host of the Trading Justice podcast with my brother, Matt. We've done 456 episodes. We have a lot of fun doing that over there. And I'm a trading coach and mentor. I've worked with thousands of people in a one-on-one level and scenario. Working with people over the years has truly been one of the joys I get from financial education. Watching growth, watching people have those aha moments and the light bulbs go on. I love doing it. I love being a coach and a mentor, and it's an opportunity and a privilege for me. And yes, I am the founder and COO of Tackle Trading with three other fine individuals, including my brother Matt and Coach Gino. And we've been doing this. We've been in business now since 2013, and we have a vibrant, growing community of many of you out there. And in the chat right now, hashtag Team Tackle to represent our growing community of rabid fans and wonderful students of the markets alike. Appreciate every one of you guys out there, no doubt about it. But most importantly, I am a father and a husband first, and very proud of those things. My kids are all out to Spider-Man actually tonight with my wife. They're part of that $253 million, box office budget, I guess, over the weekend, and they're out doing that tonight. And I'm home alone teaching you guys here, and I would rather be nowhere else than right here, no question about it. But I love the opportunity to be a father to those kids and a husband to my wife, and I appreciate them all the time. And yeah, we got three puppies as well, Max, Molly, and Charlie, and we're proud dog owners as well. Tonight's presentation, is around portfolio design. And what you're going to learn tonight is several different things. Number one, what is portfolio design? We're going to define it, give you guys some information, some explanations around it. I'm going to teach you the 4 building blocks on how to learn to trade. Okay, and go through that process that I've taught many, many people over the years. I'm going to give you my 80-20 rule for strategy selection, as well as some explanation, some understanding around the risk of ruin theory, which I believe is one of the most important concepts for any trader in the markets to actually understand and build your systems around. And we'll have a discussion around the role of cash flow, growth, and speculation as well. And the last thing we're going to do is we're going to give you some portfolio design examples. And real quick here, getting a call from a student, which makes me check on YouTube. We are live. You know how it is when you're presenting live there, Maddie. I want to make sure we're good to go, and I think we are. Here in this presentation, I want to keep it big picture. I want to keep it high level. I want to have a discussion about the most important things that you need to think about as you're moving into 2022. In my experience, many new traders to the market, they start this whole business with the wrong expectations. They come in trying to get rich quick. They hear somebody talking about how much money they made day trading, or how they took $100 and turned it into $1,000 on a crypto trade or a long call trade or whatever it is. And we have this greed pulling us in to also wanting to participate and make that money, right? It's natural. We're all human. I think we should just truly try to understand it, and understand that also it can be a risk if we let that greed dominate the way that we make decisions. Portfolio design involves building a blueprint for how you're going to use the capital in your investment portfolio. Okay. An investment portfolio is just the collection of all the stocks and bonds and currencies and commodities, real estate that you own as an individual. Now, that might be in one account. It might be in many accounts. In fact, over the years, I've seen all kinds of different examples as to how portfolio execution works. And I'll tell you, whether you have one trading account that you just started for the very first time ever, where you've got 10 grand in it, you just got to figure out what to do, or you got 10 trading accounts and investment accounts because you've had 4 different jobs over the last 30 years, and you got old 401ks and a Roth IRA, and you got your spouse's or significant other's account, you got kids account, whatever it is, whether you go from really, really simple to really complex, you still got to have a portfolio designed for those accounts. And I am a personal believer as a coach and a mentor that you do that from a holistic perspective. I lump everything together, no matter how complex it is, and start designing them one at a time with that individual. And if you truly are in a situation where you need some instruction, some help on that, you might need to get with a coach one-on-one. There's no question about that. In fact, I would absolutely recommend you work with somebody with experience that can help you define the nature of what you're supposed to do. From tonight's perspective, I really want you to try to get a nugget or two, some information so that you can start to think about this stuff correctly, so that as you have those conversations with veterans, you can actually put these pieces together and build that puzzle out effectively, no question about it. There's some questions that you need to ask and answer. Number one, what systems do you trade? Do you trade the cover call system like the Tackle 25? Okay, great, fantastic. It's a wonderful system. Do you trade cash flow condors? Okay, not yet. All right, well, then we're not going to build that into your portfolio design. Oh, so you do? All right, what accounts do you trade them in? What is your asset allocation per system? Within the Tackle 25, for example, do you use 50% of your money for covered calls, or do you use 70%? Do you use 30%? These are things I think are very important to define beforehand, because it's kind of like most situations in life. If you have it planned, you're able to handle stressors and problems as they come up a lot better. Have you noticed that in your own life, by the way? If you have a plan in place beforehand, whenever the inevitable problem comes, and it will, it happens in every business, in every venture, whether it's a road trip with your family, just going on a vacation, or whether it's designing a covered call portfolio, there will be a flat tire at some point, right? And how you handle those problems really will come back to planning and systems. And I think that's really important to ask and answer those questions. How much money do you allocate per system, and why? I think about this whole thing, and I think about the stories of my life. And one of the analogies and one of the lessons I've learned in my life is how to build a better portfolio by thinking about the way my dad taught me how to build a house. And if you think of portfolio design as truly building a house, we might have some contractors out there, that have done this before. When I was like 12, 13 years old, I actually was given a tool belt and a hammer. I don't know if I got a hammer the first day at work. Actually, probably not. My dad probably didn't trust me with it yet. But I was given a job and a tool belt to go and work with my father building homes, spec homes in a small community in Utah. And we built dozens of homes over the years, and we do a couple of them every year. And, we learned how to lay concrete, and we learned how to frame and add sheetrock and, finish the house and roof the house and shingle the house and the whole 9 yards. Portfolio design comes down to 3 different phases. You first have to build a proper foundation. Okay. That proper foundation is found in your investments and your capital to begin with. Your long term is your foundation, not your short term. See, new traders get pulled in, they get focused on the short term, and they forget that if they don't have a proper foundation, they might be living in a shanty shack where they've lost all their money and it's all falling apart like the house on the left. So you don't want to be the house on the left, you want to be the house on the right. You want to have a proper foundation that was built from the ground up with structure, okay? Then as you build the elements into the house, like the plumbing, the electrical, the things that make it easy to live, that's your cash flow. So foundation equals growth, okay? The living in the house, the plumbing, the heating, the electrical, all of that kind of stuff, the comfort of your life, the comfort of your portfolio, that's your cash flow. Because if you can build consistent income into your portfolio, it's going to be a lot easier to run it on a day-by-day, week-by-week, and month-by-month basis. See, the last element is speculation. Those are things like day trading or trading long calls or long puts or very aggressive Vega-based trading, the fancy stuff, the stuff that's quite frankly really attractive, and it pulls at all of our greed strings. It pulls at every bit of those things that we all are susceptible to, the idea of making a lot of money really quick, right? The sexy stuff. The sexy stuff is last. See, that's like the paint on the wall, or the beautiful art that you hang on the wall, or the pool you put in the backyard, or whatever it is. The fancy things that are just kind of, the extra wonderful things that you want to have in your house, but you don't start there, do you? You add those last, and those are your speculation strategies. So when you think about designing your portfolio, I really want you to think about that house analogy. Start with a foundation with long-term investment mindset. Then build the functionality of the house through your cash flow, and then add all the decorations and the finish work and all those type of things through your speculation strategies. Whenever I have an opportunity to talk about mindset from a big picture perspective, I'm always brought back to a very important process that I go through myself. And it goes back to a book that I read about, I think it's been 8 or 9 years now, called Start With Why by the great author named Simon Sinek. And if you've not read that book, pick up a copy. It'd be a wonderful Christmas gift if you have read the book, by the way. It's about 200 pages, easy read. You can read it in a flight, honestly. I mean, it is a wonderful, wonderful book to pick up and read. And Simon talks about the importance of starting with why whenever you start any important journey, including business, entrepreneurship. And in my experience, in my field here in the trading world, starting with why in the trading world is just as important as any other field as well. One of the questions I want you to ask out there, especially if you're new to tackle trading, or even if you're not, if you're a veteran of tackle trading, why do you want to become a trader? What is the purpose? Why this business and not something else? You need to define that. You need to identify that. You need to even write it out in a why statement or a mission statement, some form, some fashion of that. After you ask and answer the question why, then you can work on how you trade the markets, how you're going to do what you do on a day-by-day, week-by-week basis. The what you trade in the markets actually is fairly straightforward. You should start with equities, learn how to trade stocks first, and things like ETFs. We did a webinar here on YouTube about a month ago with Coach Greg Holmes, where he talked about the importance of understanding market funds, right? ETF products and equity products and things like that. Those are the what elements in trading, but it all does start with why. Why you want to be a trader is going to be different from a person by person basis. I get the great opportunity to talk to so many individuals out there, and it's one of the true joys in my life, being able to help people and being able to talk to them about proper education in the markets and doing this the right way. I was having a conversation today with a man, and I won't mention his name. It was a one-on-one conversation, but I'll mention some of the takeaways from it. He used to work as a train conductor in Chicago, and he's looking at the markets as another opportunity in his retirement to be able to make some money as he no longer has to work full time. He has a pension, he has 401k, whatever assets he's accumulated over the years, he wants to grow them, keep them, control them, and cash flow on them. And one of the reasons why he wants to do this is that as a train conductor, when he used to drive the downtown route, he would see all the men and women who worked at the downtown options exchanges. And for years, he was always fascinated by these people that rode his train all the time. And what he told me, I thought it was really cool. He said, Tim, they always had the biggest smiles on their faces. And I'm like, okay, there's a reason. I mean, financial education and true proper understanding of the markets does give you a lot of opportunity and can give you a lot of joy, no question about it. He wanted to have what they had. And I had another conversation with a separate individual, from San Antonio, Texas today as well. And this guy and this man, and I won't mention his name either, it was a wonderful chat. He's at retirement as well. And all he wants to do is be able to stay home, keep working out, keep his body and his mind healthy, and not get pulled back into the rat race that he doesn't want to go back into. He's worked his entire life to get where he is, and he has a very, very strong why. You also have a strong why. I guarantee it. Whether it's freedom, whether it's legacy, whether it's time, whether it's security, whatever it is, those whys are what are going to carry you through those inevitable challenges that you're going to face that are going to make you want to quit at some point. Markets are not easy every day. Markets are not easy every week. And as you build these skill sets and learn how to do this properly, you're going to have some of those moments where you're like, man, this is hard. How you carry yourself through that will come back to structure and planning and having that strong why, no question about it. The what is the simple part. What products are you going to trade? Are you going to trade equities, Forex, futures, options, crypto? Once you've determined which product you'll trade, you then identify what time frame you'll trade. But I want to give you some bit of advice and a little bit of direction on the what part of it real quick as a veteran here. Don't use excessive leverage early on just because you get access to more money from the market. Forex is leveraged 50 to 1 here in the US. It's leveraged 200 to 1 internationally. The crypto market, you can see $100 turn into $1,000 in a day in some of these crypto products. I get it. It's exciting to watch the money change. But if all you're really doing is getting excited and having endorphins pop in your head because your money's going up and down, all you're doing is gambling. The markets, if you approach them as a gambler, you're going to get what gamblers get. You're going to get wins and losses and inconsistency and no real future for it. Okay. You want to focus on the simplest products first, equities, then options, then everything else. And I want you to write that down. Equities, then options, then everything else is pretty much the flow of what you approach in the markets. And then the last thing is the how. How are you going to trade? Are you going to day trade? Are you going to swing trade? Are you going to position trade? Are you more of an investor? The execution of systems and strategies is where portfolio design really rests. And it's really the impetus and the focus of tonight's conversation, the entire concept of portfolio design. And that's what we're going to be talking about the rest of the time. See, to me, the how is vital. There's no question about that. The how is absolutely vital. Day trading is a very, very exciting thing to do. We have day traders in our community that have incredible freedom because they can wake up in the morning, trade for a couple hours, put their accounts to bed, then come back the next day. I hear in their stories and I see what they're doing every day. And I'm like, that's awesome. For me, day trading is something I like to do like a couple of days a month. It's not a primary focus of what I'm doing every day because quite bluntly, I got kids and dogs and other businesses too, right? I don't want to be there all the time. So that's just a personal choice. For brand new traders who start out in day trading just because it's attractive, you make a lot of money, that's a real risk for you as an individual. And there's a lot of real bad actors out there in this industry. There's no question about it. They're going to paint the picture of easy riches if you just learn how to do this one thing. And that's just not the case in trading or markets. Markets are dynamic. Markets are complex. Day trading is an incredible opportunity in the market, one that you should absolutely be aware of, understand, try, even study. But I wouldn't start with day trading. That is not going to be the place that I would advise most people to start. Swing trading is a lot more palatable for many new traders because they can run their daily routine. They can execute their swing trades just in a few minutes every day, follow their rules. A swing trade is anything from a few days to a few weeks, essentially. It's the pivot to pivot relationships that Coach Matt talks about in the step system type mentality, for example. And I love swing trading. I absolutely think it has a role, and day trading has a role in many portfolios as well. Investing is something everybody should do just the same way that we all need to walk and eat, and it's vital in life. You got to grow your money, guys. You have to, with inflation where it is and where it's going to be heading for a long period of time, with the nature and how money works, you make money, you earn money, you spend money, the extra money you should invest. And we should all become investors, whether we're also day traders and swing traders. They don't necessarily, it's not like one or the other. You can be a day trader and a swing trader and yes, an investor. And then the last style of trading is called position trading. And it's my favorite style of trading because it's where option trading really rests. It's where the core of cash flow trading really comes back to. And position trading is where you enter something with the plan that it's going to be there, building its position profitably, hopefully, right? Over the course of weeks to months in time. And a lot of the cash flow techniques that we teach at Tackle Trading are truly position trades. And I got to tell you, whether or not you're focused on theta or delta or gamma or vega, whatever style that fits within these different time frames, the how in your market accounts, the how in your portfolio design, the how in your business, you got to define it. It shouldn't be something that you change with the wind, like a paper sack in the wind, right? You should have a defined, structured approach and process to your how and execute it over time. And it really brings me back to one of the most important things I'm going to teach you tonight. And these are the 4 building blocks behind building and learning the markets properly. Okay. And I want you to write these ones down for certain. Number 1 is you got to have a strong commitment to learning. Just like any field, you got to continually keep your head in the book, right? Proverbially, you got to keep your butt in the seat. I say that all the time. You got to have seat time. In fact, one of my favorite students I've ever trained, her name is Beth Salamanca. And I'll never forget, I was introducing Beth on stage to win an award for her success that we celebrated as a successful trader. She entered this organization's Hall of Fame of trading. She did a great job with it. And she got up there in front of the room and she says, Tim, and she looked at me and she was giving her acceptance speech. She says, the greatest thing you ever taught me, and I'm paraphrasing now, but she said, is just get my butt in the seat and learn, spend seat time. You got to have seat time, no question about it, because the markets evolve and the markets change and themes change and your skill sets might change and your life might change and you're going to evolve and grow with those things over time. This is not the kind of thing where you just learn one tactic one time and then you do it for the rest of your life without having to learn anything else. Have a strong commitment to learning as you're going through this journey. That's step number 1. Then step number 2 is to properly understand and be trained on the theory and terms behind it. Here would be a little quiz I would ask almost any new trader. Do you know how to find a trigger entry point on an intraday chart? Okay, yes or no? All right. How do you build a contingent order in the options market to buy a long call to get into a trade if you're trading the step system? Do you know how to do that? Okay, yes or no? All right. Those are some advanced questions. And maybe I'd tone it down a little bit. But like, what is a stock? Can you answer that, right? What is an option? What is an expiration date? What does delta mean for the strike price? See, there's lingo in this business. There's lingo in any business. But there's lingo in this business that until you get it, it's still like a foreign language to you, right? That's where that commitment to learning is so important, so that as you build an understanding of those theory and terms, it helps you execute step number 3, and that's to craft your skills, refine your skills, and learn how to execute your skills on a day-by-day and a week-by-week basis. Reading a chart, order entry, trade management. If you are new to the markets, a lot of the complexity comes into not just how to put on a trade. Anybody can learn how to put on a trade. Do you know what to do when you have profit? When you have losses, when you have market volatility kick in? Do you know how to handle that when there is a problem? I talk about this quite often, actually, and I use a lot of analogies when I teach. My daughters are at the movie tonight, and I think about my little Sammy. And recently, I've been, thinking about Sammy learning how to drive a car because she's getting closer to that age where she's going to be taking, driver's ed lessons and all that kind of stuff. When she was a little baby, like 2, 3, 4 years old, just a toddler, I would come home from work. I'd come home from mentoring. I'd come home from the golf course or wherever it is I was. And as I was driving into the neighborhood, I'd call my wife, and Sammy loved doing this. She would come out into the driveway. I'd stop the truck and she'd climb up in my lap and she would drive the truck into the garage and we would park together. And she thought it was really, really cool. Well, her skill of driving a car when she was little, she was on her dad's lap, right? She had that hand-holding moment to be able to do that. Today, now she's getting closer to teenage years and she's going to get a driver's license. Well, now she's going to actually have to learn how to drive that car with proper training. I can't just put her on my lap all the time. See, you in the markets, learning how to put a trade on is basically learning how to start the engine. But do you know how to drive on the freeway? Maybe you got to take the back roads, right? Whatever the analogy is that fits where your current skills are, learning how to manage and mitigate risk as it comes in unforeseen circumstances that takes time. It takes months, if not years, to truly build those skill sets. And there's many market conditions that you just will not experience until you're in them in the moment. Volatility kicking in 2020 was new for an entire generation of traders. I got started in 2005. I remember when the markets crashed in 2008. I remember when the flash crashes came in 2010, and when markets dropped 10% in August of 2011 and 12 and all those type of things. But until you've lived it, you haven't lived it, right? And that's why having a community of people that can help you understand it as you're going is very important to help you build that skills and execution. And then the last element is system and strategy. And as you build your trading system, as you identify the strategies that you want to perfect and perfect those tactics over time, it's the crown jewel of what we do. It is such an incredible feeling to know this is what I'm doing with my account. This is how I'm approaching it. And this is exactly how I'm doing it day by day and week by week basis. And guess what, guys? The longer you do this, eventually you're going to find those edges in your own system. You'll learn things like back testing and system design that you can build your own strategies into. You know, Coach Tyler Craig, who is one of our most veteran, incredible coaches at Tackle Trading, anybody who's had an opportunity to learn from Coach Tyler knows how great he truly is at teaching people to trade. I remember when he was brand new and he didn't know nothing. Okay. He wasn't just born with those skills. He worked on those skills. He then learned how to build systems through back testing and design. And I remember conversations Tyler and I had 15, 16 years ago when we were brand new traders in the market. And just think about that, Tyler, if you're out there watching and listening to the show right now, how far we've come because we've just simply put our butt in the seat and done it over time and done it with a learning mindset to correct mistakes when we make them, learn from mistakes when they happen, learn from volatility, and then build our edges as they come up over time. That's the crown jewel of trading, and it's the reason why I'm talking about portfolio design here tonight. My personal approach, and I want to keep this big picture for a minute. This is the way I would explain it to somebody over a coffee that I just barely met. If we were on a public bus and they asked me what I did for a living and we got into the conversation, oh, I'm a trader. Okay, how do you do it? How do you design it? I'd say I do the 80-20 rule. This is my personal approach. 80% of the time, I focus on what I call my bread and butter strategies. Now, that's going to change from trader to trader. Your bread and butter might be cover call, naked put, iron condor. But the person next to you's bread and butter might be, bull put spread, bear call spread, calendar spread, right? See, it can evolve depending on what you've been trained on, what you like to execute, and how you trade the markets. But 80% of the time, you should focus on your bread and butter. Now, for me, that's theta, okay? My bread and butter is around cash flow. It's what I've done successfully the most in my career. It's what I love the most. It's what I believe in the most, because I believe in the value and the importance of consistent returns over time. In my estimation, I think new traders try to make way too much money. If you're brand new, you're probably thinking, Tim, there's no such thing as too much money. I get that understanding as well, but you got to understand it from a veteran trader's perspective. If you're trying to make the biggest returns possible, you're also taking excessive risk and you're probably not managing that money correctly. You probably haven't been trained on risk of ruin theory and position sizing in the right way, and you need to take a step back and just accept the get rich slow mentality. I'm a huge believer in theta and cash flow strategies, and they're the core of my bread and butter. I also have some Vegas stuff in there personally. Within the bread and butter, there's a few strategies I really love that would be considered volatility strategies, but they're a little bit more intermediate to advanced. And then 20% of the time, I use what I call bag of tricks strategies. And that's just an affectionate name I gave it myself when somebody asked me the question probably 10, 12 years ago. Bread and butter is the stuff you do all the time. It's what you butter your bread with. Bag of tricks are the specialty things. It's like that one club in your golf bag that you pull out for that one shot around that if you hit it, everybody kind of like looks at you like, whoa, did you just do that? And most of the time, you actually still shank it into the water, by the way, but you have that one club. If you're a golfer, you know what I'm talking about. So you just don't do it all that often. You don't build your entire design around it. And those strategies might be things like delta in day trading or Forex trading or crypto trading or even gamma scalps, stuff like that. Within the strategy matrix, you're going to find strategies that you do most often, strategies you do only some of the time. And it gets me to the essence of truly what a successful trading plan is. What goes into a successful trading plan? The most important element is risk management at its core, because we can sit and talk about whether you trade bull puts, bear calls, iron condors, cover calls, day trade, Forex, futures, crypto, anything under the sun. If you excessively misuse your money, if you over leverage, and if you take too much risk, it doesn't matter what you do. You will eventually lose in the market. See, and that is just a true understanding that you cannot skip past in any conversation about portfolio design. And it goes back to a thing that we teach in coaching called the risk of ruin theory. Risk of ruin is a concept in gambling, insurance, and finance that basically relates to this one simple thing. What is the probability or the possibility or the likelihood that I'm going to lose all my money? And in essence, the higher amount of risk you take per position and per trade, the more likely you are to lose all your money. Eventually, over time, at some point. This little graph here is just a simple infographic to try to describe this principle. The percentage amount of money you put into a per position trade, the percentage of your bankroll that you're willing to risk. Let's say you got 10 grand, you put all 10 grand into it. Well, then you're willing to risk 100% of your money. Guess what? If you're wrong on that one trade, you're ruined, right? That's the risk of ruin theory. The lower percentage of your bankroll that you're willing to risk per trade, the lower the probability of ruin becomes. And there's a number that we always refer back to in portfolios management, in portfolio design, and in risk of ruin conversations. And that's 4%. Okay. You should absolutely keep your per position, per trade, per strategy risk below 4%. When you make a decision, do you have the potential to lose up to 4% of your money? If it's more than that, you got to reevaluate that decision. Now, you might be thinking, well, Tim, I got to spend more than 4% of my money to buy 100 shares of stock. We're not talking about money spent. We're talking about money at risk. And that's an important designation in your accounts. 4% of 10 grand is 400 bucks. 4% of 50 grand is $2,000. 4% of 100 grand is $4,000. Take a calculator out, put the amount of money you have in your account and multiply it by 0.04, and it will give you the maximum amount of risk you can ever take. I was talking to one of our most veteran students, actually a guy I've known for a decade now, about a couple weeks ago, I think, just after Thanksgiving. We were having a nice little chat, catching up on life, that kind of thing. And I was talking to him about the risk of ruin theory, and he was asking me some questions about a new account that he was building a new portfolio design for, because he'd been trading forever, but he now has this new account he start and all that kind of stuff. And I mentioned this, and he says, well, Tim, I don't want to risk 4%. He kind of chuckled at it, right? I've known him a long time. He's like, 4%, that's way too much money. I do not want. I said, no. You're misunderstanding the risk of ruin theory if you think that's advice. No, that's the maximum theoretical risk you can take and still even have the possibility of continuing to be in the markets for a long period of time. Many conservative traders keep their risk way lower than 1% per trade. It depends on you. It depends on the amount of capital you have. It depends on your ability. But in general, lean on the lower side as you're learning and growing, and then lever up as you get a little bit more experience. You should not just come out and go for it without the understanding of what going for it means. Start conservatively, start small, increase your risk over time as you understand these concepts better. It's the better way to approach it. And to minimize the risk of ruin theory, there's simply two things that you can focus on, and they're wonderful areas. One is diversification. There's a thing we do in advanced coaching called delta weighting your portfolio. And it's something Coach Matt loves teaching people how to do. It's a very important part of understanding the relationship between bullish trades and bearish trades and neutral trades. I mean, think about it. You got 15 or 20 different trades out there, and some of them are bull and some of them are bear and some of them are, specialty techniques. It can get a little complex, right? There are tools that we have as traders that will help us understand that risk. And then we can measure that risk down to a specific amount. It's a wonderful tool to know. It's a wonderful tool to use, and it's a wonderful skill to have. It just is super advanced. Look up actually on the Trading Justice website. If you go back into our old blogs, there's a blog that I wrote a couple of years ago on delta weighting your portfolio. You can also find content on Tackle Trading around the same topic if you're interested in those areas. Using positions that naturally hedge each other is a way for you to minimize your risk. Okay? Think about the markets right now. If all year long, all you did was buy stocks, all year long, all you did was buy stocks. But this month, the market started going down. You're probably dealing with some stop losses, some risk, some ruin, some losses in general, some red in your accounts, right? What if a month ago, when the market started turning over in different sectors like communications and different sectors that were being downgraded, different opportunities in the ARC innovation type stocks, or you went into the option report and the stock report, and you went down to the bear list and you found some of those bearish positions to take as well. And instead of 15 bullish trades, you had 10 bullish trades and 5 bearish trades. See, that's what we call natural hedging. It's when you approach the market in different ways because you're open-minded to whatever's happening in front of you and just looking for opportunity on the bull side and the bear side. You can then naturally hedge your risk over time. That's an important part of minimizing the risk of ruin theory. And the other one is improper business design to begin with. As you grow your accounts, what do you do with the capital? Maybe you reinvest it. Some of it should go into long-term assets. Some of it should go back into equity positions. Some of it you should pull out and put in cash, right? Proper position sizing, all of those kind of things through proper business design also help you minimize the risk of ruin in your account. And these are the elements of an equity curve that when you look at the history of an equity curve, you know what this is if you're a veteran. That line in front of you is an equity curve. It's part of any journaling in the account. And as you log the trades that you make, if you started, like for example, on the bottom left, you'll see the number 100. Maybe you started with $100,000 and your account went up over time. In your first month, maybe it popped up to 110, but then back down. And then over time, you grow it back to 110, but then back down, and then up and down and up and down and up and down. Your equity curve should be from the bottom left, sloping to the top right. If your equity curve in your trading is not from the bottom left to the top right, reevaluate. If you're not making money over the long term, you're probably doing something wrong. Maybe it's in strategy identification. Maybe it's in money management. Maybe it's in execution. It doesn't matter what it is. You got to identify it, figure it out, and fix it. Okay? Because if your account starts on the top left and goes to the bottom right, that means you're losing money. Now, even in accounts that have what we call a positive equity curve, that's basic market lingo. That's like code for I make money over time, right? In an account that has a positive equity curve, you're still going to have periods where you have drawdowns. In an equity curve, drawdowns are very natural. It's when you watch the amount of your money go from a high point to a low point. Psychologically, that can be difficult. But when you know that's a part of it, when you know that's a part of your journey and it's expected, it shouldn't beat you up that bad. Nobody likes losing. Don't get me wrong. You should never embrace the idea of losing. That's not something you want to do, but you should have context around it. You should be responsible about it. I ask traders all the time. It's an important question when we talk about wins and losses and drawdowns and gains. How many trades you think you're going to take next year? Think about that. How many trades do you think you're going to take next year? Well, if you're a day trader, you might take thousands of trades. Like somebody who recently I enrolled in our coaching program. He had 3,000 or 4,000 transactions this year alone. Okay. If you're a position trader, maybe you'll take hundreds of trades. Even if you just do cover calls, for example, if on average you do 10 to 15 cover calls a month, over the course of the year, you're going to have what? What is that? 120 to 180 transactions. And that's not even considering rolling your call up or down or sideways, which are also transactions. See, out of all the trades you're going to take in the entirety of 2022, do you think you're going to be winning on all of them? Or you think maybe you'll have some losses? Yeah, you're going to have some losses. Okay. Understand it. Don't be intimidated by it. When it happens, give it context. Don't get emotional. Don't beat yourself up. Try to learn from it. Treat it like a professional. Treat it like an adult and realize this is the nature of risk and reward. You don't get guaranteed 10% returns. You don't. That's not the way markets work. You don't get a guaranteed 2% a month. You have to earn it by taking risk and by managing that risk. And there will be times and periods where you lose. And your job as a trader, and the reason why you get to earn more money over the long haul, is because you had context to it. It didn't wipe you out of the market. It didn't make you crawl into the fetal position and give up trading. You just moved forward because you had a strong why and a commitment to learning and all the mindset stuff I talked about a minute ago. It's to carry you through the drawdown periods. I can't tell you how important to me it is that traders have a plan for that circle on the screen right there. An understanding of it, an appreciation for it, a respect for it, and a plan for it. Drawdowns are natural. It's your job to design your system to reduce their frequency and magnitude. You should not see your drawdown take all your money. You shouldn't see it take most of your money. It will happen, but control it through your design of your portfolio, which is the core of what we're talking about here tonight, which is risk control. Through proper design, you can control risk so that you better appreciate and understand markets over the long haul. So on a day-by-day and a week-by-week basis, you simply do your job, right? There are three components that go into any portfolio's design. One is cash flow. 2 is growth, and 3 is speculation. All of them play a role. Depending on the type of person and trader that you are, they all play different roles, okay? Cash flow strategies include things like covered calls and naked puts. Now, we're going to stop right there because in my opinion, as a veteran of these markets, until you know how to do those two things, the other stuff should be put on the back burner for a few minutes, for a few days, for a few weeks, for a few months. I don't care how long it takes. Learn how to trade a cover call effectively. Learn how to trade a naked put effectively. They are the cornerstone of all cash flow strategies. Then other wonderful theta strategies that I love, like the bull put spread, bear call spread, iron condor, like the cash flow condor system we have at Tackle Trading. All of these. Calendar spreads, diagonal spreads, inverted butterflies. Anything that we define as theta is what we really are saying is a cash flow technique because it's theta positive and time passing benefits the strategy. See, a little bit of trader lingo here that I want you to write down and understand. When a coach at Tackle Trading says it's a theta strategy, that's code for positive cash flow expectation. It's because theta is positive in the trade and the passage of time is going to benefit the transaction to give you an edge in the market. Okay. In my experience, focus on cash flow, focus on naked put, focus on cover call first, then build those others in over time. The second element is in growth investing. And really what we're talking about is longer term investing in the stock market and buying assets, buying wonderful companies you believe in. It can be around disciplines and principles like value investing, like Warren Buffett believes in. Quite frankly, guys, I know how the sauce is made. I know how the sausage is made in the Tackle 25. And the combination of value principles and growth principles that go into those lists, those are wonderful, wonderful growth opportunities in those companies. And if you go back, and if you've been a veteran of our community for long enough, you know those lists have been money for a long, long time. And if you go back over the years and you really truly look at the performance of the companies on the Tackle 25, you'll see the value in what those things represent, what they bring. But it doesn't have to just be value stocks. That's not really the only way to approach long-term investing. You can approach growth stocks as well. There's a list we have in the Tackle 25 called the Dirty Sexy Money Stocks as well, which are wonderful long-term growth opportunities as well. Other popular methods that would fit into growth are things like Can Slim, which the IBD group made popular from the 1990s on. You can invest in precious metals or real estate or property or even crypto. Growth to me does not just mean buy a dividend paying company that doesn't go anywhere. Growth is your longer term process of building and accumulating wealth through investment. It's stuff that you put your money in that you're not trying to micromanage every 5 minutes, right? And as we make money in cash flow, that money then can be moved into growth to help us truly build our wealth over the long term. Okay. And then the last area is what we call speculation strategies. And in my opinion, everything in speculation is exciting and wonderful and something that you should really want to learn, but you got to treat it with the respect it deserves. Because if you're going to truly trade long calls, long puts, short stock, long the directional dependent strategies, you got to have a higher degree of difficulty. You got to have a higher skill set, and you have to have the context to manage that risk behind it and fit it all in together. And here's another thing I wanted to make sure, and I even wrote a note in my notes here today, and I wanted to make sure that we talked about when I was talking about delta and speculation strategies. Every one of these theta strategies can be treated like a speculation strategy if you mismanage the money behind it. See, true speculation, when it's done correctly, is still very properly executed in the way that you do anything in your business, in your trading business, right? It's just that you identify and you understand what the expectancy is. You know that you're not going to be right 95% of the time when you trade a bullish breakout with a T2 target using some step system lingo there, right? But you also know that there's a reason why you're going for the higher target, because you might be able to make a little bit better return and you're willing to take a controlled risk in that environment, so on and so forth. I've found some traders, they think they're trading cash flow because they're trading naked puts, but because they trade way too many contracts for what their account can control or what their risk appetite is, what they really were is they were moving a theta strategy, a cash flow strategy into speculation and treating it far too aggressive. These are the areas that go into your portfolio design. And quite bluntly, whatever it is you do, you need to define it. You need to build it into your rules, and you need to execute those rules over time to make sure you're doing it correctly. And yeah, there's other speculation strategies that are wonderful. Gamma scalps, day trading, bear put spreads, ratioed spreads, fancy stuff, the bag of tricks stuff I was talking about a little bit ago. Those are all what I would lump into speculation. What I want to do for the next few minutes is talk about a few different hypothetical portfolios that you could see in proper designs, okay? Anytime we're starting a process with a mentor or coach, we first are going to ask the question, why are you doing this? What are your goals? We're going to introduce proper mindset, just like we did tonight in the presentation. I'm then going to ask you a very, very direct questions. How much capital do you have? Where is it? Where is it at? In what accounts? What is your goal with that capital? And how do you want to execute it? We then start to reverse engineer a plan, or what I should say is engineer a plan, where we identify, okay, in that account, you're going to focus on cash flow or growth or speculation. We identify the percentage allocation, and then per system, we define which systems you're going to trade in each different allocation. And then per position, we define how many positions you're willing to trade, how many you should trade, and what money you're willing to allocate per position in that design. Now, the image you're looking at in front of you is just the hypothetical big picture. Now we're going to go through some hypothetical examples of how you might start slicing up this pie. Okay. And the first one I want to talk about is a classic cash flow focused account. If you're starting with 100 grand, and I use 100 grand just because it's a round number, it's easy to kind of split up percentage wise and mentally. The first question, if you're a cash flow heavy focus, is how much of your money are you going to dedicate towards cash flow? And you might do like 70%. I just use that number. I've used that number with mentor students in the past. Maybe $70,000 of the money that you've identified or earmarked, so to speak, is going to be identified for cash flow strategies. From there, maybe you put 10% mentally towards the growth categories, 10% towards speculation, and maybe 10% always in cash. Now, in this design, those numbers represent what you're willing to do when you're fully allocated and fully invested in the market. In reality, guys, most traders don't ever get fully invested in the market, or very rarely, I should say. There's always a little bit more cash that they're just holding on the side for management and stop loss placement and all that kind of stuff. But it's more about the theoretical of where you're willing to put your money over the different systems. And then once you have identified, okay, I want 70% in cash flow, just as a hypothetical here, maybe you put 60% in covered calls, 10% in condors. In your growth, out of the 10% you have in growth, maybe 10% of it you do towards the boomerang trade, which I know Coach Mark over in the Cash Flow Vikings, Skull, I know I don't do it right for my Viking friends, but Skull nonetheless, he loves boomerangs, where you take a naked put and you have the expectation you might get assigned 100 shares and turn that into a covered call. It's a wonderful tactic, one that you'll learn from Coach Mark over in Vikings. Maybe put 10 grand into that in this design for growth perspective. And then 10% in speculation, like the step system or a directional trading system, something like that. From there, you can then start to pinpoint, okay, per position, how much am I willing to put per position? Now, this is important. It's very important that you guys understand this so that we are not miscommunicating at all. Whenever I say an amount, that's not a recommendation that you always do that amount per trade. That's like the maximum theoretical amount in this design, right? Remember the risk of ruin theory. Every system and every rule within your system must come back to the question and answer. If I'm wrong, how much will I lose if I'm wrong? And if you put $20,000 into a high beta stock with zero fundamentals that goes up and down 50% a month, then you're risking way too much on that trade. If you put 20 grand in this design into the SPY, because you understand market dynamics and you can mitigate it through protective puts, that's what we're talking about here. And maybe you do way more than 3 trades, by the way. I know a lot of traders, and what I've found in my experience is a lot of traders can manage between 10 to 20 trades at a time. And the most advanced traders who've been doing this a long time, they might do 20, 30, or 40, sure. But even some of the most advanced traders I've ever known, they like to keep it simple and keep it around 10 or 15 anyway, okay? You're going to have to define how many positions you're willing to take on. But after you identify the system, then you allocate per position. And all of those positions have to have money management elements in place to make sure you don't violate your rules, to make sure you don't take excessive risk. And every rule you ever build in your portfolio, 100% should be reviewed with your coach, with somebody who's a veteran who can look at it and say, you know what, I like what you did here, but this might be a little bit too much risk, or this might not be enough of your cash allocation, whatever it is. Here's an example for those of you out there that would want to focus on cash flow. And you would maybe like earmark 70% of your money for your cash flow techniques and 10% for growth, 10% for speculation, and 10% for cash, okay? Second example I want to give you is one that would be more balanced. Here would be an allocation if you took cash flow and growth and you tried to balance them against each other. And instead of 70, 10, 10, 10, it'd be more like 40% cash flow, 40% growth, 10% speculation, 10% cash. I like this one a lot. Okay. The longer I trade, the more I like growth investments, and I think that's pretty common, by the way, is as you make more money in your life, as you have more money to invest, those type of things, eventually you're going to want to kick those things into longer term mindsets and growth. And it might even be a natural thing for a portfolio design like this. If you're just a working professional who also has like mutual funds in a 401k from your work, or you might have different accounts or whatever it is. Having some of your money earmarked for cash flow and then a balance against growth is a very common approach to markets. And one I love. I love this approach. And then you keep a little bit still on the side for speculation and cash. By the way, you'll notice I haven't had one example yet where I say 100% here and nothing else anywhere else, because that usually isn't the way people approach markets. Even the most conservative traders and investors, having some money on the speculation side, I think is a healthy thing to do, by the way. It just has to be in the right context, right framing, and all those type of things. Then systems, still, you're going to then identify systems you know how to trade or that you've built, whether they're the Tackle 25 or vertical credit spread systems or condors. Cash flow systems, again, to review, are anything that are theta positive. If you go to the Tackle Trading website, under the Trade Center, there's a button that will say Playbook. Anything in the theta category could be a cash flow system, okay? Anything in the theta category can be a cash flow system. The other two most likely are going to go into speculation or growth systems, depending on which ones they are. And then from there, maybe in your growth, you're going to now dedicate more like 40% towards boomerangs. And somebody might do this, especially if they're interested in boomerangs on commodity-based stocks, like gold mining companies or, those type of companies, or even commodity ETFs like gold itself or silver or copper, you name it. Those type of systems are more for long-term, for different purposes in the way that you balance the design in your portfolio. Then your speculation strategies are still going to be defined. And then your positions would be earmarked from there. It's a logic tree, guys. You don't start with what stock do I buy? You start with how much capital do I have? How do I design the portfolio? What systems do I know how to execute and trade? And then last is what stock do I buy and how much money do I put in? That's like the last step, not the first step. Okay. You don't start in the markets like, hey, tell me what to buy, like you're trying to get a stock tip. No. You approach this like a business, and you really design it with purpose and with execution in mind that fits your life and your goals, no question about it. This would be an example of a balanced-based approach. And then lastly, I built one that would be speculation heavy, and I want to talk about somebody who goes about this approach in the market, okay? If, let's say you just put like 10% in cash flow, and 10% in growth, but 70% of your money is in speculation. And then just 10% in cash. If you're going this route, it better mean that you're a veteran trader that has back tested those speculation systems, that you still have money management principles in place, that you understand risk of ruin for your day trading accounts or your swing trading accounts or your Vega-based accounts or your earning strategies. It generally just means if you're going to actually build your portfolio this way, it probably was because you already ran the other types of portfolios for years and you grew into learning how to do this way. If you're starting out in the markets and you're like, Tim, I only got 10 grand. I want to make some money now. Let's go for it. There's a real risk there, guys. Heavy focus on speculation can be excessive risk, and it can lead you to having a bad experience. And I'm going to talk to you just as, a person right now who wants you to have the best experience. The most important thing that you can avoid in your first year of trading is getting bounced out of the market because you didn't give yourself a chance to truly learn and understand this. The worst thing you can do is try to go out and make money today. If this is your first day being introduced to the financial markets, if this is your first month being introduced to the markets, trying to turn this into just a side hustle or another way that you're going to just hustle some money into your life, like the gig economy teaches us, right? It's not really what this is. You got to reframe your thinking towards the opportunity in front of you and build yourself a process that allows you to grow towards more aggression only if you choose it. I don't love speculation heavy accounts. I tend to steer people away from them for many different reasons. But I also am not the type of person to say that it can't work for somebody out there. But that should be through back testing and execution and skill set development and experience in the market. You truly got to have that seat time to know that. And then even from there, though, if you do that, you then have to identify your systems and earmark capital and risk allocation and all that kind of stuff. And then positions as well. How much are you going to put into your day trades? How much are you going to put into your swing trades? How much are you still going to put in to your tackle 25 positions, even if it's only 10%? Whatever your portfolio design is, build the numbers in, build the rules in, and then execute those rules over time. Cash flow, it has a role. Growth has a role. Speculation has a role. I don't have one bit of advice because, quite bluntly, it depends on the person, which is why we work with people in one-on-one settings and small group settings, because you got to truly figure it out. Like every individual is a puzzle, right? Okay, how do you approach your life? What is your income? Are you retired? Are you just starting your career? Are you 22 years old and you just got married a year ago and this is your very first time opening an account? Every detail would impact the way I would coach somebody on how to approach the problem, how to solve the problem, and how to build their own personal portfolio design. Within cash flow, I love all these techniques. I do. I love all of them for different reasons, in different purposes, in different contexts. But I'm kind of an old school guy like this, and it wasn't like that when I was brand new, by the way. I built that over the years. Cover calls and naked puts are first, learn how to do the simple stuff. Learn how to make a little bit of money consistently before you try to double and triple return your accounts all the time, right? Take it with baby steps. Take it one step at a time, moving yourself forward. Then add the complexity. Okay. Growth. Long stock. Long stock, if you don't own any stocks that you plan on holding for years, if not decades, I think you're probably making a conceptual mistake. Okay? If you don't own anything that you believe in, you haven't looked at enough companies, because there's plenty of them you can believe in out there. And I'm sure that's true of anybody I can talk to, whether it's a gold miner, just because they pay excellent dividends, whether it's a food processor because they've had consistent returns every year for 50 years, or whether it's some new growth idea that you believe in the future of their management and what they're doing and how they're going to solve problems for society. I guarantee there's something you believe in out there. I know the coaches, we all have companies we love. We all have companies that we can hang our hat on and we can say, okay, that's a stock that I believe in. Build a plan for your growth as well. And if you starting out in the markets and your biggest focus is cash flow now, because you got to make the income, maybe you're in your first 5 years of trading, something like that. Sure. Yeah. Maybe a heavy allocation towards theta and cash flow. Then over time, as you make money, I'm going to tell you what's going to happen naturally to you. You'll eventually start buying more stuff to hold. You'll buy more stuff to build assets with. You'll put more money into ETF products like the SPY or the Qs or whatever it might be, because one of the true examples of wealth is in asset allocation over time. Look at how much Apple computer stock Warren Buffett has. Just go look at his 13F filing over any given year, and he's got a big chunk of his money in Apple. You want to know why? Because he made a lot of money, and over time, he buys what he believes in. Okay. Now, for me, I might do a lot more companies than just like that, but that's the same principle, though, and I think there's a lesson there. There's no question about it. Through value investing or CAN-SLIB methods, and definitely keep an eye on those metals markets, no doubt about it. And then the last areas, speculation, they play a role. I'm not trying to get you to stay away from them completely. But when I was asked by my brother and when I was asked by some of the other coaches, what are you trying to get people to remember if they attend your presentation on Monday night? And one of my first answers, and I'll just paraphrase because we had many conversations about it, is I want them to do this the right way. I want to be able to say, I found a new trader who had been fed a bill of goods by a bunch of snake oil salesmen, and they found us. And instead of going down the dark path, the wrong path in markets and having bad experiences, they learned the lesson early on from a veteran, old guy in the markets, and they decided to go about it in a better way. And I know many of you out there will hear that lesson, embrace that lesson, and absorb it. And some of you might hear it, but maybe you won't remember it or really understand it until you've also had some of your own experiences. That was me. One of my very first coaches and teachers, he actually told me on day one almost, do covered calls first. And I nodded my head like I was listening because I thought I was. But then I went and did all this day trading and speculation stuff first anyway, because I thought I was smarter than the teacher, right? I thought, well, I'm different. No, we're all a lot the same a lot of times. And the experiences of many have been proven out. And that's where what really works in a market is proper design, proper money management, proper execution, and then adding to the complexity over the long haul. Guys, there's a process to learning how to do this. Start with why. Identify what kinds of accounts that you're going to build. Retirement accounts, trading accounts, all of them under the sun. Build the capital in those accounts, either through your investments or your returns. Build the style of trading and the type of trader you are through your systems. Build a power team of people around you. They're going to make sure you don't lose it and do it the wrong way. That can give you advice and feedback and input into the way that you're approaching markets. And you truly will put yourself in the best opportunity to succeed in the financial markets here, anywhere, and with tackle trading. And with that, guys, I do want to talk a little bit about, what we do here at Tackle Trading as I kind of am winding down, losing my voice as well. But I do want to kind of start wrapping up here and talk a little bit about the journey and the process we have here within our company. We actually have built different ways we can train and educate people, and we give you guys access to them depending on the level that you're at or the stage that you're at in your journey with us. As you get to know us, you're probably first seeing us or meeting us on our freemium level. Okay, things like our podcast, where we give high quality free content. I think the best there is out there on YouTube, no question about it. And if you're brand new to the channel, do not hesitate to smash that subscribe button, click the bell so you join us whenever we go live. But don't miss out on our podcast. I'm proud of these podcasts. I love the Trading Justice podcast. I'm very excited about what the Huddle is growing into to help people stay informed every weekend. We release those on podcast formats. You can find us on any of your favorite formats and make sure you subscribe to us. Every day, Coach Matt and the team of coaches we have here, including myself, we do the halftime report where we keep people informed on how to approach their daily routine. Any day the markets are live, we go live 12:30 Eastern. And instead of getting all that headline clickbait nonsense you get from financial media, you get real traders breaking things down one step at a time. Free guides like the 7-step guide to trading right on our website, the option Greek guide to teach you how to do this stuff, our fantastic blogs, and yes, even some wonderful tools on our trade center. After you've kind of gotten to know us over a period of time and we've built the trust between each other, and you know that we're here to help you and we're here to educate you. The next stage people go to is they go to our pro level content. And if you're out there and you're watching our channel and you've been watching our channels for a long time and you're like, you know what, these guys are good. I think I can really learn from them. It's time for you to upgrade to pro. Okay. And come and learn in our courses, our 101 on-demand courses. They're right on our website. You can take them at your own pace. You can truly get those theory and terms around technical analysis and options and futures and Forex. Attend our live shows, pretty much about 14 to 15 shows a week, depending on the given week. We have mastermind groups around various topics like bear market survival guide, the step system. That's all included in the pro. Our daily traders lounges in the morning where you can just hang out with the coaches and the team of other traders at Tackle Trading. That's a part of your pro. Every day at 11 o'clock Eastern, they're live for an hour. The evening shows like the coaches shows and the cash flow clubs, those are fantastic webinar-based shows that you can be a part of as a pro member. Our premium blogs like the Option Theory blog, Tales of a Technician, and yes, one of the most popular components of the pro membership are our scouting reports. Every weekend, we do a process we call bird dogging, where the coaches go out and find the best trades in the market, bullish and bearish, and we build them into our stock and options report every Saturday so that you have a list of candidates that have been pre-qualified by veteran traders and coaches that could be bullish or bearish in the next week and give you opportunities to trade on them, whichever ones you choose to do. Full commodity analysis from Coach Mark as well. And we have fantastic tools, including our journals, which are amazing. The Theta spreadsheet journal, if you're a cash flow trader, you should absolutely download that and check it out. And it will give you a lot of context and value into how you select different trades. Our playbook for an analytical, if you're out there and you're looking for rules and structure, dig into that playbook. You're like, okay, Tim, I want to learn more about that cover call, that naked put, that bull put. Guess what? There's a playbook strategy with a video and rules all built into the Tackle Trading playbook right on the website. So go check those out, as well as the Tackle 25 covered call list. And yes, our mastermind groups, I love them. I hold our coaching mastermind group, which is a part of our premium systems, and that's one a month as well. That's the only mastermind group that's not a part of the pro, but I love our mastermind groups. The step system group is incredible each and every month. Coach Matt does a fantastic job. Tackle 25 mastermind group, where we go through the covered call theory and concepts. We review a lot of those stocks on the list. Those are incredible. I love our MMGs, so make sure that you're a part of those on a week or a monthly basis and weekly basis whenever they happen. And then the last area is stage 3 of what we call premium. And premium systems like the bear market survival guide or the cash flow condors or the Tackle 25, by the way, they're amazing. They're fantastic at any time. And if you're watching this show right now, we actually have them on a discount over on the store at Tackle Trading, so you can go check them out. I also put trading labs in our premium, and that's where you have one coach leading a group of people. And we love our trading labs. Our veteran students love our trading labs. Team Tackle represent, you love our trading labs, Team Phoenix and the Vikings team, and Coach Emily Mururi's Dynasty Investors as well. They're very, very wonderful groups, and they all have a Discord channel associated with them. And the crown jewel of what we do here at Tackle Trading is in our one-on-one coaching program. And I'm going to be very direct and very, very, hopefully very clear about this. You need to get some structure. You need to get some advice. You need to have some hand holding. You need to have some help. There's no question about it. But if you're fresh right off the boat, you've never taken 1 hour of education in the financial markets, you haven't gone through the 101 courses, haven't gone through the playbook, coaching may not be ready for you yet. You might need to build your skills first and build your concepts out and learn how to do the basic stuff. But when you're ready and when it's time for you to take your trading to another level, if you've been around markets for 6 months, a year, many years, but you've never been really able to put it all together, I've got a veteran team of coaches that are all amazing in their own right. And it's my job to match the student with the coach. And anybody out there who's gone through our coaching program knows it is customized to the individual. The content and the lessons that you want to work on are what you guys work on between you and your coach, and you're going to love it. If you want more information about the coaching program, the real simple thing I want everybody to do, sign up for a consultation, come and talk to me. I'll answer your questions. And the one thing you'll always get from me without hesitation is just help. I'll give you direct answers. I will give you the information you need to take wherever you are in your trading education, wherever you are in your journey as a trader to the next step. And that might be to start with a system. It might be to start with a lab. It might be to just learn how to do covered calls or really reevaluate the way that you're approaching it. And if coaching's for you, I'll let you know and we'll talk about it. Okay. tackletrading.com/schedule consultation and come and join us for a 30-minute free one-on-one with any of our coaches. There is a link in the description of the YouTube video just below you, and we'd love to have you come and join us. And if you're looking for a wonderful offer right now and a discount around the holiday season, guys, make 2022 the best year yet. Visit our store, tackletrading.com/store. We have systems on sale. We have our annual pro membership on sale. We have pretty much everything we offer at a discount until the first of the year. All of those details are on the storefront at Tackle Trading. But quite bluntly, I'm losing my voice, Coach Matt. I know that you're out there. And I am going to wrap right now. How you doing, brother?
Tim, doing absolutely fantastic, and you did an amazing job, my friend. Thank you so much for coming on and honestly spending a lot of time talking about portfolio design, mock portfolios, the structure. But the honestly, the part I love the most is the start with why stuff because being in this industry for a very long time now, having that structured and having that why is so vitally important because there's going to be times, and we're going through one of those times right now that is uncertain, is volatile, can drive you a little crazy with the whipsaw impact of the market and the news-driven market right now. These things do subside, and when they do, that's when trading becomes very, very, very powerful. And so having that why to know what you're working for, to overcome some of those challenging environments that the market certainly does have at times is so important to overcome. And having a community to rely on and to ask questions and get help and to see that you're not out there by yourself, that you're not the only one going through this, that others are going through this as well is very important as well. And I really do appreciate your time here tonight and the level of importance about this conversation is just unstated. It's so important to come into this business with structure, with discipline, with a design in mind that you want to work towards. And maybe you're not there, maybe you are there right now, but working towards that is so important. And we're just happy to be along for the journey at Tackle Trading.
I'm reading the chat now, and I appreciate those kind words. This is the first time I'm getting to scan through the chat. My first thought is, what an incredible gift and opportunity to be able to hang out with you guys on a Monday night just in front of Christmas. I've got the feels right now, Matt. I've got my family in town.
You got the feels.
My daughter's getting married in 10 days, guys.
Yes,
I'm getting old. Her fiance just flew into town, and having a team of you guys out there, it's so awesome. And I really want to just looking at the names, Adib, listen, I understand I said somebody was my favorite student.
They're all your favorite. Which one's your favorite kid? I love them all. But that's the thing about a community. We've known thousands and thousands of traders along the way, and the people we get to communicate with daily and navigate the market with all the time at Tackle. They're all the best. This community is amazing. We love you guys, and I'm sure we'll talk to many of you throughout the week, but from us to you, just please have an absolutely amazing and Merry Christmas to absolutely everybody out there. Happy holidays. Just spend great, amazing time with family and loved ones, and know that we're thinking about all of you guys, and hope you guys have just an absolutely amazing holiday season and Merry Christmas.
Yeah, Merry Christmas. Happy holidays to everybody out there. Yes, Peter, I am losing my voice. I appreciate the nice comment that it's soothing. It's not soothing to me right now. I'm losing it. So we are done for
We're
tonight, guys.
done.
We'll be back tomorrow on YouTube like we always are, though. But the number one thing, if you're out there and you're thinking about what can I do next, visit our store, take a look at the educational offerings, become a part of our community at whatever level you feel like you're excited about, that you want to take advantage of. And if you're truly interested in building an educational plan for yourself, join me in a consultation. I would love to talk to you. I really would. I truly get joy out of them. It gives me a lot of value personally as a coach and a mentor and experienced trader to help beginners in the journey that you're starting right now, whether it's your first day, your first year, or even in your first 5 years. Doesn't matter to me how long you've been doing this. We're here to help you. So set up a consultation. You'll find a link in the description below. Other than that, happy holidays. Merry Christmas. We'll see you guys next time.
Later, Tackle.